Have you ever looked at a financial institution like Goldman Sachs and wondered, beyond the daily stock price, what really makes it tick?
Yeah, what's going on under the hood, right?
Exactly. What did those earnings reports and analyst opinions actually tell you about its underlying strength and future potential?
A good question.
Today, we're taking a deep dive into the Goldman Sachs Group, Inc., ticker symbol GS. Our mission is basically to cut through the noise, go straight to what's driving this financial powerhouse, and really distill the key insights from, well, a whole stack of sources, a detailed stock report, their recent earnings transcripts, various analyst views, all to help you become, a more informed learner, maybe even a more confident investor.
And what's truly fascinating here, I think, is how understanding a company of Goldman scale gives you this direct lens into the pulse of the broader economy.
Right.
Whether you're thinking about investing or just want to get a better handle on market dynamics, dissecting a giant like this offers really invaluable perspectives. It helps connect the dots.
That's a crucial point. So let's start at the beginning then. For anyone maybe not super familiar, what is Goldman Sachs beyond just, a big name on Wall Street?
Sure. Well, at its heart, Goldman Sachs is a global financial institution founded way back in 1869, headquartered in New York.
Wow, 1869.
Yeah, long history. And its reach is genuinely worldwide. They provide this huge range of financial services to a really diverse client base, corporations, other financial institutions, governments, even wealthy individuals. Think of it like a central hub for global finance.
And what's really interesting looking through the sources is just how diversified they are. They operate across four pretty distinct segments that people might mistakenly lump together. Can you walk us through those?
Absolutely. And that diversity is key to their resilience, I think. First up, you've got investment banking. This is their advisory arm.
Okay.
Handling massive deals like mergers and acquisitions, divestitures, corporate defense strategies. They're also big in underwriting, helping companies raise money through IPOs or selling bonds.
The classic investment banking stuff.
Exactly. Then there's global markets, often called GBM. This is where they help clients execute trades, both cash and derivatives.
So trading.
Right. Across credit, interest rates, equities. They also provide essential services like clearing, settlement, custody, kind of the plumbing of the markets in some ways.
Makes sense.
Then number 3 is asset management, or AWM. Here, they manage huge amounts of money across pretty much every asset class imaginable.
Like everything.
Pretty much. Stocks, bonds, but also alternatives like hedge funds, private equity, real estate. And they offer customized investment advice too.
Okay. And the last one.
And finally, consumer and wealth management, CWM. This part focuses on wealth advice and banking services for individuals.
Ah, so more personal finance focused.
Yeah, financial planning, investment management, taking deposits, providing loans like unsecured loans. It's really a comprehensive financial ecosystem, sort of designed to capture value across the whole financial cycle.
It's quite the operation when you lay it out like that. So how does this multifaceted player stack up in the market today? What's the snapshot look like?
Okay, looking at the data, the symbol is GS, trades in US dollars. Last close price we saw was $708.26.
$708, okay.
Yeah. And key TTM metrics that's trailing 12 months market cap is around $217 billion. PE ratio is 14.28.
Which tells you?
Sort of how investors value their earnings relative to the price. Price to sales, PS, is 2.03, and they offer a dividend yield of 1.69% right now.
Okay, and how does that $217 billion market cap compare, to their peers?
Good question. It puts them as a major player, no doubt, but interestingly, not the largest.
Oh.
Yeah, JP Morgan Chase, for instance, is way bigger, over $809 billion market cap. Wells Fargo is around $262 billion. Morgan Stanley is even slightly larger at $225 billion. So yeah, GS is a giant, absolutely, but it operates in a field with even bigger giants. It highlights how competitive that top tier is.
That context is really helpful, especially when we look at their recent performance. Because Goldman Sachs really crushed expectations in Q2 2025. What were the headline numbers there?
They certainly did. The numbers were, frankly, robust. Net revenues of $14.58 billion, Earnings per share hit $10.91,
Well,
which translated to an annualized return on equity ROE of 12.8% for the quarter, and even better, 14.8% for the first half of the year. That signals really strong efficiency and profitability.
and the board clearly liked what they saw. The sources mentioned a pretty hefty dividend increase, right? A 33% jump.
They did. That's a big move, pushing the quarterly dividend to $4 per share.
That's a significant statement of confidence, isn't it?
It absolutely is. A 33% hike like that, it's the board basically signaling extreme confidence in their future earnings, their future cash flows.
Right.
And add to that, they've got this multi-year share buyback program up to $40 billion. They already returned $4 billion in Q2 alone.
So returning a lot of capital to shareholders.
Exactly. It shows management believes the company's financially very healthy. Like Jim Cramer said, this quarter showed how Goldman has become a well-oiled machine.
A well-oiled machine. Love that quote. But how did they pull it off? What were the main engines driving these results?
Well, the primary engine was definitely their Global Banking and Markets division, GBM, generated a massive $10.1 billion in revenues.
$10 billion from one division.
Yeah, and achieved a first-half ROE of nearly 18%. I mean, this segment was firing on all cylinders. Advisory revenues alone shot up 71% year over year to $1.2 billion.
71%. That's huge.
It is, and it cemented their number one spot in M&A. That's not just about bragging rights. It builds that economic moat we can talk about later. Being the top advisor attracts more deals, more talent.
Makes sense. What else in GBM?
Well, their FICC, that's fixed income, currencies, and commodities net revenues, were up 9% year over year to $3.5 billion. Basically, more client activity in, somewhat volatile markets.
Okay.
And the real standout, equities. Net revenues hit a record $4.3 billion. That was driven by records in both equities intermediation, so trading and financing. Powerful combo.
So GBM was clearly the star. What about asset and wealth management? AWM.
AWM also pulled its weight, definitely. Brought in $3.8 billion in revenues. Management and other fees were up 11% year over year, reaching $2.8 billion.
Steady growth there.
Very steady. And what's really notable is client assets under supervision hit a new record. $3.3 trillion.
Zillion. With a T.
With a T. And that marked 30 consecutive quarters of long-term fee-based net inflows.
30 quarters. That's 7.5 years of continuous inflows.
Exactly. It speaks volumes about client trust and just how sticky their wealth management business is. People bring their money there and tend to keep it there.
That consistency is remarkable, which I guess leads to the next question. How does this performance, especially those inflows, tie into Goldman's long-term durability? What gives them that competitive edge, that resilience?
Yeah, that's a crucial aspect. The sources consistently talk about Goldman Sachs having a wide economic moat.
Okay, what does that mean exactly?
It's not just finance jargon. It means they have durable competitive advantages that protect their long-term profits from competitors. For Goldman, that moat is built on, sort of, three main pillars.
Jar.
Best-in-class talent, they attract and retain top people. A deeply ingrained collaborative culture, which sounds soft, but actually helps them leverage expertise across the firm. And, as we discussed, that highly diversified business model.
Right, the 4 segments.
Exactly. It's actually pretty rare for analysts to assign that wide economic moat rating. It means something significant.
So what are the tangible results of that moat? What really sets them apart?
Well, their consistent #1 ranking in global M&A is a prime example. It's not just about winning deals today. It builds institutional knowledge, client relationships, a reputation that attracts the next big deal and the best bankers.
A virtuous cycle.
Pretty much. And look at their client engagement. They now work with 125 of the top 150 global clients. That's up significantly from just 77 back in 2019.
That's a big jump.
It creates incredibly strong client relationships, high switching costs. You see that directly reflected in those 30 straight quarters of net inflows in AWM. It's all connected.
Okay, so they have this strong moat. What about looking forward? What are management's strategic priorities? Are they optimistic?
Definitely an optimistic tone, particularly about investment banking. They see the deal-making environment as remarkably resilient despite global uncertainty. M&A volumes are up 30% year over year.
Wow.
And their own advisory backlog has grown for 5 straight quarters. That suggests strong future activity, and they expect IPO confidence to increase too.
And strategically, where are they focusing?
They're clear about driving growth in financing, expanding more into alternatives and wealth management areas that are often less capital-intensive or offer steadier fees. They're aiming for mid-teens ROEs, which is ambitious.
Mid-teens ROE, okay.
Yeah. And what's really forward-looking and pretty fascinating is their heavy investment in AI.
Ah, AI. Everyone's talking about it.
They are. Goldman's developing things like the GS AI assistant, piloting an autonomous generative AI agent called Devin. The goal is to boost operational efficiency, drive long-term cost savings, kind of future-proofing their operations.
That's definitely looking ahead. But, even a well-oiled machine can hit bumps. What are some of the potential headwinds or challenges the sources point out?
True, no company is risk-free. The macro environment is definitely a big one.
Like what specifically?
Geopolitical issues, think Middle East tensions, unresolved trade deals, potential impacts from higher tariffs. These external factors can definitely sway client activity and market stability. It's an unpredictable backdrop.
Okay, external risks. What about internal challenges? Any specific areas of concern within Goldman?
There are a few things highlighted. Modest net losses in their historical principal investments, or HPI, that's their private portfolio, particularly some real estate markdowns.
Real estate.
Yeah. Management anticipates a more muted harvesting environment for these assets in the second half of 2025. Basically, might not get as much profit from selling these off soon.
Okay. Anything else?
Also, provisions for credit losses ticked up to $384 million, mostly from credit card charge-offs. They stress strong risk management, but it's a number worth watching.
Credit losses, got it.
And finally, operating expenses were up 8% year over year. That includes some severance costs, although again, those AI investments are meant to bring efficiencies down the line.
Right, the AI investments might pay off later. So, okay, we've got this picture. Strong performance, solid moat, but also these clear internal and external challenges. How does all this synthesize when we look at Goldman's valuation? Is the current price reflecting all this?
And this is where it gets really critical, especially if you're thinking about this as an investment. The momentum is clearly strong. But our proprietary valuation models, based on the source data, put their fair value estimate around $519.89.
$520.
With a price target around $464.08. Now compare that to the current market price we mentioned earlier, over $700.
Right, $708.26. That's a big gap.
It's a significant discrepancy. It strongly suggests that investors have already priced in a lot of this positive outlook, a lot of that future growth potential, which could mean less upside from here.
What are other analysts saying? Do their targets align?
It's a bit mixed, which is interesting. The average analyst target over the last 6 months is around $637.75. So lower than the current price, but higher than our fair value.
Okay.
Some recent targets from July are higher. Glenn Shore at $715, Mike Mayo at $785. But there were also older, lower targets back in April, so opinions vary.
And any flags from insider activity?
Just as a data point, yeah. CEO David Solomon had some significant share sales back in May 2025. There were also some exempt transactions in April. Insider sales can mean many things, but it's information people often look at.
Definitely adds to the picture. Okay, this is a lot to weigh. Let's try and crystallize it. Can we lay out the core bull versus bear arguments straight from the sources? What's the strongest case for being optimistic about Goldman?
Sure. The bull case really rests on their dominant market position and that diversified strength we talked about.
Right, GBM and AW.
Exactly. GBM, with its powerhouse performance in M&A, FICC, equities, consistently throws off strong revenues. Combine that with the steady inflows and fees from AWM, and you have a very resilient base.
Okay, solid core business. What else?
The optimistic outlook for investment banking, the idea that M&A stays strong, IPOs pick up, and their advisory backlog points to future deals, that fuels growth hopes.
Makes sense.
Then there's the strong capital management and shareholder returns, that high CET1 ratio, the big dividend increases, the buybacks. It shows confidence and discipline.
Management returning value.
Right. And finally, that strategic focus on growth areas like alternatives and wealth, plus the big push into AI for efficiency. Bulls see this as strengthening their competitive moat even further.
Okay, that's a compelling bull case. But we know there's always another side. What's the bear argument? Why might someone be cautious?
The bear case definitely starts with those macroeconomic and geopolitical uncertainties. Just the sheer unpredictability out there.
The big picture risk.
Exactly. Then, internally, those challenges in historical principal investments, the HPI losses and muted outlook could be a drag, even if they're shrinking that portfolio.
Okay.
Also, rising operating expenses, even with planned AI savings, and the increase in credit provisions could pressure profits, at least in the near term.
And the valuation concern again.
Absolutely central to the bear case. The feeling that the current market price has already baked in all the good news, maybe even too much good news, leaving it potentially overvalued compared to fundamental estimates. Less room for upside, more risk of disappointment.
Right.
And finally, just the inherent complexity of regulation in banking and Goldman's own very high bar for making acquisitions, it might limit their flexibility for super fast strategic moves compared to, say, fintechs.
So there we have it. Goldman Sachs. Clearly a financial powerhouse, strong recent results, that impressive economic moat. But as we've unpacked, maybe a lot of that good stuff is already reflected in the current stock price, and those broader economic risks are definitely still lurking.
Which leaves us with a really interesting question to ponder, I think. For a company that is, by many accounts, a well-oiled machine, consistently performing well, what does it really mean to invest when the market price might be significantly above some estimates of fair value?
Hmm.
Is that premium justified by their strategic vision, the AI push, their market dominance, or does it leave very little margin for error if things don't go perfectly?
That's a great question to chew on. Really highlights the balancing act involved in looking at any company, especially these giants. We hope this deep dive into Goldman Sachs has given you a clearer picture, maybe some valuable insights.
Hope so.
And if you found this valuable, if you want more deep dives like this delivered right to you, please do hit that subscribe button and ring the bell icon. It really helps support our channel, and you'll never miss an update.